We all want our bags to moon. But realistically, if you're cheering for your bags to moon, you are rooting against America. Now, for those of you that aren't Americans, that obviously doesn't matter. In fact, some of you might take glee at rooting against America. But for those of us that are Americans, it might come as a shock. And I will explain it. You are rooting for the suffering of Americans and the American economy overall. But although I am rooting for that, I am not rooting for a lot of suffering. I'm just rooting for what I call limited suffering. And this is actually what I mean. Obviously, rates being high affects the rates of bonds and bond ETFs and stuff like that. You can get a 30-year bond close to 5%, I believe, or at least a 10-year bond close to 5%. And that makes cryptos kind of unpalatable because if you have essentially no risk in getting a 5% ROI, many people will take that route. Instead, you could also get one of those bond-based ETFs that pays twice as much ROI with very, very limited risk. And obviously 10, 11% ROI with very limited risk. Yeah, people are going to be going for that. So things like crypto, which are super high risk, and obviously it hasn't helped that there's been more and more scams going on in crypto, are not going to look super attractive with that high ROI. What do we need for that ROI to come down? We need the FOMC rate to come down. Yes, the same thing that has mortgages and car loans really high. We need those to come down, and we need the investments on those bond-based ETFs and the bonds to actually come down. Otherwise, crypto won't look super attractive. Yes, I know the stock market looks attractive right now, but the stock market overall is a little less risky than crypto, especially in the AAA stocks, because the companies, if you buy the stock, unlike crypto, you are actually owning a part of the company, and you are kind of tied to the company's financial future. Unlike, if you buy a coin, you're not really buying a part of the company, and the company can just issue another coin as well. So crypto is a lot more speculative. Plus, there's a lot more numbers and stuff like earnings to actually look at in the stock market. The only chain that I know is really profitable is Tron right now. And many people scoff at Tron. So, an ultra high risk market like the crypto market does not moon very hard, especially the alts, if the interest rate is very, very high. So therefore, we need the interest rate to come down. And I know some of you looked at Trump's tweet or whatever on Truth Social / or Twitter today, and he said GDP is 3%, way more than expected. Unemployment is low. Inflation has held steady. Things like that. Powell needs to cut rates. But if you understand economics, that's not true. Look at when and he wants a 3% cut, which means right now it's about 4.25%. He wants a 3% cut for the interest rates to be 1.25%. The FOMC board voted 9-2 against. Obviously, Jerome Powell has one vote among the 11, and he voted against, but only 2 Fed board members actually dissented in the meeting to vote against. Now, if you understand economics, you understand that the numbers right now don't actually want Powell to cut rates. When do rates get severely cut? Let's ask that question first. Well, the last 2 times were after the '08 crisis and after COVID forced a shutdown of the American economy. So essentially from that, you can actually see that when the economy is tanking, that's when the Fed actually activates and cuts rates. But right now, the economy is not tanking. Donald Trump said himself that the economy is doing quite well. When the economy is doing quite well, when the stock market is at all-time highs, when unemployment is low, those are the exact opposite conditions that you would have for a rate cut. So, logically, Jerome Powell actually has zero reason, according to the Fed's dual mandate of inflation and unemployment, to actually cut rates. And in the matter of inflation, you should know that we did rise from 2.4 to 2.7 on the June report, and I expect us to raise higher on the July report as a few things, coffee and a few other things, get a lot more expensive as the tariffs actually take effect. There was a huge buying spree right before tariffs came in for companies to actually supply their inventories. But now, after a couple of months, those inventories are starting to run low and things are going to start to filter and cost a little bit more. And we're seeing that filtering out into like the daily stuff that we buy. Mainly like obviously imported stuff, electronics, like fruits, coffee. And like there's a lot of like just everyday appliances that are going to cost slightly more. And if that causes our inflation rate to rise above 3, the Fed is very unlikely to basically lower interest rates because lowering interest rates will cause inflation to go even higher. And one of the reasons is, the willingness of people to take loans to buy things. For inflation to go down, really it's a supply and demand thing. You need people to stop buying so much stuff. That includes Americans stop buying so much stuff. Well, if you lower interest rates and take the cost of borrowing money down, then people are going to be more likely to borrow money to actually buy things. Now, that will generate GDP, but because you are increasing demand, that will also spike up inflation. One of the reasons that housing prices have actually been controlled in the last year or two is because inflation rates are really, really high. Now, the housing market hasn't actually reversed in most places, but it's slowed its growth pretty substantially, and the inventory of available houses on the market has actually gone up. So it's turning more into a buyer's market. Obviously, the high inflation rate, most people can't actually buy a house outright. So the mortgage actually does cost more if you have to get a mortgage right now because of the high inflation rate. But the actual selling price of a house is actually, stopping to go up, or even in some places coming down some. Obviously, it depends really on where you live. Some of the really hot areas like in Cali are still going up. But, some places in the Northeast and the South, they're going down because the interest rates are too high. People can't afford a mortgage. And if they can't afford a mortgage, there's less demand for housing, buying houses. Sellers can't sell them quite as easily. So people aren't bidding 10 or 20% over the asking price. They are bidding now maybe under the asking price. So that's why the price of buying a house outright with cash has actually decreased, and the demand for housing has actually decreased. You decrease those interest rates, people are going to be looking to get a loan to buy a house. That means more houses are going to be bought, the demand goes up, and the price of housing will actually go up. So essentially, the interest rate more or less has to drop for the cost of housing to actually go up. And the interest rate essentially has to drop for risky investments like crypto to actually make more sense to buy over the more safe bond yields. If the bond yields come down, people won't be interested in that ROI anymore, and they'll delve into more things like crypto. So why are you rooting against America? Well, it goes back to what I said. The last 2 times we really cut rates by a large amount were because 2008, after the economy basically just dropped through the bottom because of the Fannie Mae, Freddie Mac situation. And of course, right after COVID, they dropped it to 0 as well because everyone was shut down. GDP went way, way down. And if you didn't give people the money, they would have had no money to live, and many people might have just been completely out of luck and completely out of money. So basically, the Fed only lowers rates like the amount that Trump wants, or really any amount when the economy is doing bad. And that is seen by unemployment numbers as well. And of course, a drop in the GDP. So essentially, what we need for a rate cut is the GDP to drop and people to lose their jobs. Now, here's the thing. We don't want too many people to lose their jobs because causing a depression would actually cause the demand for speculative assets and crypto to actually go down as well. We just need some people to lose their jobs. It's at like 4.3% right now. We just need the unemployment to be like maybe at like 5%. That would get Jerome Powell to actually cut really hard. But that also means it's much harder for certain people to find jobs, especially those that are already out of work. And it basically makes the labor market favors the employers more, which means they can beat down on prices more. So we kind of want that to happen, but to a very, very limited extent. So yes, we want slightly more people to lose their jobs. We want the GDP to actually go slightly down or stagnate. So we don't really want growth. And through that, we want the stock market to stop reaching all-time highs because crypto's growth depends on all those things stopping. And that's why I'm saying that you need to cheer for some limited ponage against America. Because right now the economy is amazingly resilient, just like it was the last couple of years. GDP is positive, has been since 2022 essentially. Unemployment has been low, has been basically since we got out of COVID. And generally, the economy is doing pretty well, chugging along. Some people might not actually see it that way because things cost more, even though they're making slightly more. They might see it kind of hard, but companies are having record profits. And yes, there are some layoffs, but there are also more people hiring. So what you're really cheering for when you want rate cuts is you want a couple more million people to get fired. You want them to lose their jobs, and you don't want them to be able to find jobs that fast. You want people to not have as much money and not be able to actually buy as much stuff, and because of that, stuff would actually come down in price because you're killing the demand. The only way to kill demand is if people don't have money. So you really don't want people to actually have money in order to buy stuff. So once again, you are rooting against America generally because America is the big market for crypto. And there's another factor as well, if you haven't considered, why Koreans like crypto so much. So especially the younger generation in Korea, they really like crypto because they don't really see a way out of the rat race unless they take really risky bets in the investing market. They can't settle for a 10% ROI or a 12% ROI. They need that 700% ROI to have any chance to get actually out of the rat race. Now, Americans are getting more desperate, but they're not quite getting that desperate yet. And what we need to do is for things to get a little bit worse, not where they lose all hope and just go for glorious revolution, because that would be kind of, bloody and stuff. But we need them to lose just that little bit of hope so they will actually FOMO in on crypto as well, hoping to get that meme coin or get those altcoins to take them to new heights. Because only when people lose that little hope they have left in the traditional economy will they actually pump much, much more money in the speculative market. And it does actually need to happen in the next couple of years, because the next couple of years with Donald Trump in charge, we're not really going to have that many regulations. Plus, it's actually a very perfect time because obviously we have the Genius Act, which means we're going to have an explosion in the stablecoin market. We have the Clarity Act, and a lot of ETFs are going to come through. So it gives people a much, much, much easier time to actually ape in to these assets. So, that combined with maybe the economy having a little bit of a downturn, not too much of a downturn, maybe just, a fairly mild recession. I think that's actually enough for the Fed to get the Fed to actually cut rates, because we're not actually in a recession right now. I think a very mild recession is enough for the Fed to cut rates substantially, and enough for people to lose enough substantial hope that we kind of become like Korea, especially for the younger generation like Gen Z. Yes, if we destroy hope in people's dreams, they will find new ways to dream. And the way they'll find new ways to dream is essentially by gambling lots of money. We know this is true because it's happened before. And realistically, Americans really aren't that different from South Koreans because, they just see things as really hopeless. And for them to get out of the old 9-to-5, get out of the rat race, they have to bet it all on risky assets. If we can get Americans to adopt that same mindset, we that already hold the risky assets can actually make a bag and then use them as exit liquidity. That's kind of actually what needs to happen for our bags to pump. So technically, if you are, like I said, cheering for rate cuts, cheering for an altcoin pump in crypto, you need to be aware that you actually need America to get pwned, but only to a limited extent. And it can't be it gets completely pwned really, really fast and everything drops down the gutter because then the speculative assets won't have investors because no one has money. You still need some of the big asset managers to actually have money, and you still need people to have a little bit of money left so they can put it in risky assets in order to actually bet on them and gamble on them. And when large masses of people are desperate enough to actually gamble on these risky assets. And trust me, they will definitely buy your fart coin in an attempt to get 20x gains, even though most of them will just lose the rest of their money. As soon as they're like, desperate enough to actually do this, and along with Trump's loose regulations and the lack of the SEC really like willing to regulate anything, so none of this stuff will actually get prosecuted, people are gonna ape in like crazy under those circumstances. So it's not only the fact that you're cheering against the general economy in order to get those rate cuts, so like the Wall Street investors will actually ape in. You're also cheering for a little bit of ponage in America, so people will lose what hope they have left in the general economy, and they will be gambly enough to actually ape into these risky assets, so we can use them as exit liquidity. And that is why, if you are hoping for a massive altcoin pump, you are definitely betting against America. So let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.